The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good morning, Money Masters and Treasure Hunters. Welcome to the August 13th, terrific Tuesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that empower human potential, because living up to our potential is something we must master each and every day. So let's begin our day with some empowering beliefs. The first one brought to us by, I call her Ayn Rand. Ayn Rand, I believe, is the correct pronunciation. And she said this. She said, a creative man is motivated by the desire to achieve, not by the desire to beat others out there. Something to think about. How about this one by Thomas Edison? Thomas went on to say, our greatest weakness lies in giving up. The most certain way to succeed is always to try just one more time. Amen to that. How about Winston Churchill? I love this. Winston Churchill said, if you're going through hell, keep going. Boy, how true is that? Last one here by Ken Venturi, late Ken Venturi. He said, I don't believe you have to be better than everybody else. I believe you have to be better than you ever thought you could be. 877-927-6648. That's our call-in number. Right now we've got the Dow trading off 58.60. 58 points, I should say. $58.60. You've got the S&P off about 5, trading out at 1684. Composite down almost 16 points at 3654. Russell 2000 off about 6, trading out at 1047. Got a little bit of movement here, a little moving and grooving in the marketplace. Google off $7, Apple up $1.50. Leader in the clubhouse, the upside is Osiris Therapeutics up 106%. That is a beautiful thing. That's up $11 and change. That's on the release or some news on a drug dealing with diabetic ulcers. On feet, I believe. You've got Insys Therapeutics, that's up 24%. Visteon Corp up 4%. Digital Generation, DGIT, that's up 30%. Eli Lilly up 4%. Credit Corp up about $2 and change. To the downside, Inter Oil Corp, that's off 12%, a little over 12%, off $10. IHS Inc. off 7%. That's down $8. Google's off 6. Valspar down 6. Amazon off 450. Aetna Health down about 450 as well. Right now, we're taking a look at the ES Mini, the 30-minute chart. If you are listening on your radio or your mobile device at tfnn.mobi, thank you so much for doing that. Remember, you can always get the live stream of this show by going to the homepage of tfnn.com. Over on the right-hand side, you'll see a button that'll allow you to go ahead and stream live. It's got 3 little smartphones on it. Click on that. The show will stream live. You can always catch the archive on Channel 10. Now, as we're watching the ES Mini, we're taking a look at a 30-minute chart. We're taking a look at, first, the pattern, the colored-in pattern that you're looking at was a 1.272 pattern. Butterfly pattern, I should say. And that took place yesterday morning at 5:30. So when we came on the air yesterday and the 9 o'clock show out here, price had moved up to about the 1680 range out there. What we took a look at, let me just go ahead and I'll erase this line here first. We took a look at a butterfly pattern. The normal move of a butterfly is to the 0.618 retracement level. That's the normal move. Now, I was in a long trade on this in the morning, playing that little bounce out there, and my exit on this was right here at the most recent swing point, which was at about the 2:30 a.m. session, right in at 1685, 1687. I actually got out at 1684.50. There was this little gap down right here that took place at the close of the futures on August the 9th, down at 1685.75 out there. We saw prices get slightly above that during the session, pull back down lower, and then begin to move higher at about 3 o'clock in the afternoon. In the overnight action out there, where we saw the Euro-Japanese yen move north out here, that put enough energy for the U.S., for the ES Mini to move up into that 0.786 retracement level. When you break a 0.618 area, you go to the next level. That is 0.786. That was in the 1692 area. It actually got up to 1694, coming in at 5:30 this morning. Now what we're seeing here of this move is just simply a normal pullback. We're taking a look at the relative strength indicator. That's down at the bottom of my screen. You see two versions of it. We're looking at the one that is in red here. We're seeing that price here on this push down getting where? Getting into an oversold condition. That says what? That says that at some point in time here, it doesn't have to be right now at 10:11, at 10:15, it could happen during the Basel show. We should start to see that condition work itself off. How does it work itself off? It does it by either traveling sideways or retracing higher. And it works this way. You can put this on a 30-minute time frame. You can put on different time frames out here. I like to use a 30-minute time frame. It's a good EKG. It's a good EKG of the system to help you understand what the market is doing and why. If we take a look at the retracement now from the low yesterday morning, coming in at 5:30, 6 o'clock in the morning out at the 1675 range, all the way up to the high, put in this morning at 5:30 a.m., you'll see that we're sitting right now at the 0.618 retracement. I'll go ahead and erase some of these lines out here. There we go. So that move there is 1682.50. We're at 1682 and a quarter right now. Can it push down further? Oh, most certainly can. Is it going to go ahead and bust through these lows out here? Not too likely just yet. And I say just yet because it needs to work off that oversold condition out there. Not suggesting that you take this as a play to the upside, but it could be setting up an A to B equals C to up. So we'll continue to pay attention, but with the market having pushed down, taking a look just simply at the ES Mini, watching what it's doing right now, just really all kinds of normal behavior, even though the market has not been doing much from the standpoint of going very far. We've seen light volume at the top. As Tom has taught us, if you got the art of timing the trade, that's what's considered to be distribution up at the highs when you've got light volume up there. Will today, this Tuesday, August 13th, be another day of distribution? Only time will tell. But at this stage, we should see the ES Mini. We should see prices kind of ease off the pedal here, whether it be sometime between now and, let's say, the next hour or so as this condition works its way off. If it just moves sideways, all it's doing, it's revving its engines to go ahead and at least make a 100% move of a move, get down to the lows of yesterday down at 1675.25. Now, let's go take a look at the index. Let's take a look at the bigger picture. That was a 30-minute chart. So let's take a look at the bigger picture out here, and that's in the S&P 500. Now, in the S&P 500, we're looking at the price point of 1687.18 as being an important area of support, as an important area for the S&P to get back into the lower part of its trading range out there, meaning below that May 22nd swing point high. That has not happened, or has not happened by much since the time frame when the S&P 500 got over it. That was on July 18th. We've seen slight closes right around 1687, 1686, but nothing of significance right now. In fact, you've got the S&P 500 traveling out at 1685.20, so it's slightly below, but nothing of significance. Yes, at this stage, we've seen that trend line. That trend line has been broken. That's the one coming off of November the 16th. That's my first touch point. The next touch point I'm using is December 31st, a low out there. Still in play in the S&P 500. If it should decide to move up, if there is some push here, is the 1.272 butterfly to the upside. That would be at 1720. The high we've seen thus far is 1709. That's a little bit of ways away from the 1.272 expansion, so I can't say that pattern is actually completed here as we speak. Now, this black line that's going across my screen, that's the May 22nd high. That is key. That is one of the keys. But there's really also another area of support on this that's down just a little bit lower. So I'm going to go ahead and I'm going to actually move this line. And it's a little bit lower. You see, I'm going to put this up at the top here right now. But as we take a look at the S&P 500 chart, if we take a look at the trading session, in fact, of May 22nd, what we know is that was a key reversal day. It was also a bearish engulfing candle out here. So that really set up the very high of either of the sessions that it had engulfed or the actual session as your area of resistance. That is at May 22nd level. But what we can also see out here is as price came into that May 22nd level, which was back on the 16th and 15th of July out here, we had another little bearish engulfing or bear sash candle. That was on July 16th. That says that resistance would have been the high of the 15th out there. So you need to be able, oops, I didn't mean to do that. Let me go back and grab this line out here. You need to be able to, it's very important to denote the May 22nd high and for the S&P to get back in the lower part of its range. But if we're also wondering why is price kind of stopping there, there is natural areas of support and resistance out here. and that really being set up by this bearish engulfing. That's why you got to be willing to go ahead and move the line up and down. This little bear sash candle out here, and so what we can see is right around this area here where price has been stopping. It's also like an intermediate support level, and that is what is holding price in place. So I would say a close back now below this level being, we'll go ahead and use to really get back inside the lower part of the range, would be a close below 1682. That's different than the 1687.18. Right now, trade out at 1683.04. So that's going to be key for us to pay attention to in the S&P 500. We know the New York Stock Exchange, we know that has signaled to us for the last 2 weeks now and 2 days, that's including today, that the bears have had control of the marketplace out there. All we have seen, and what we have seen, obviously, is no real price erosion, but we have seen that distribution up at those highs. If we go take a look at the SPY itself, take a look at the SPYs, because we can do the exact same thing out here on the daily SPY chart that we just did on the S&P 500. On the SPY chart, it's the 169.07 mark that is getting back into the lower part of its range. That's anywhere between the May 22nd high and that June 24th low out there. We know we've got volume down there. The first volume that it's got to get to and through is June 20th out at the level of 162.10. In the marketplace. So we can see right now trading back below the range, but we can also see by adjusting, by taking a look and understand we've got some bearish candles out here. If you take a look at just this last one that formed some resistance going back towards, take a look at that May 22nd area. Again, it's that bearish engulfing candle that took place on July 16th, the top of which is 168.36, 168.39 from the prior session. That really becomes an area of support, and as we pull the line down to there, we can see that any price movement down there has held. So far today, the price low, 168.41. So thus far, that also is holding. So I would say a close back below the area here of 168.39. I don't mean 168.38. I mean below 168.39, not just below, but somewhere well below that. That goes ahead and puts the SPY back into the lower part of its range as well out there. That's on our SPYs. Now, let's go take a look at the other ETFs here and see what they're doing. We'll take a look at the IWM, the Russell 2000. The IWM right now trading out at 103.89. Again, this has got all the patterns where you should or could see reversals. The A to B equals C to up, the 1.618 butterfly pattern out here. But it, too, has really been traveling sideways ever since the July 15th area, so nearly a full month of traveling sideways. July 15th, the close was 103.58. You're trading out right now at 103.91. So in a month, this has really been nothing more than a sideways market out here. Let's go take a look at the Qs. That's in the Russell 2000, I should say. In the Qs, we'll take a look at the Qs here. They basically have or will complete this A to B equals C to up to 77.22. Not a lot of movement here in the Qs as well. They're trading at 76.31. Just right now, another sideways day. That's with your Dow being down 64, S&P being down about 6. Be right back, folks.
With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Looking back, folks, the Dow's off 62 right now, S&P down 5. And if we go take a look at the Dow Diamonds here, again, the Diamonds today testing that gap up from July 11th. That's going to be a key area, 153.71. Right now they're trading out at 153.48. Volume back there, about 6 million shares, 5.8. We've been trading here for just slightly under an hour, already about 2 million shares, 1.9. So we can see some volume accelerating to the downside out there. Not a good bullish sign. If we do take a look at the Dow Diamonds, we pull this back here. What's going to be a key area, the very first key area on the way down, assuming that it can break through that gap, is going to be the trend line. Just our trend line coming off of the November 16th low, 124 and 42 pennies out there. The next area or touch point for your trend line is going to be December 31st low, 128.54. We can see that the diamonds here held that trend line that was coming back into the June 24th high volume a swing point low out there. So the first area to give us indication of whether there's any bulls around, that's also going to be pretty much lining up price-wise, should be lining up with the next gap to the downside, or it was really to the upside. But as I'm looking at it coming from top down, that is the July 8th low, right around 151.68. Volume there, 4.9 million shares. But the first thing is the diamonds have to clear that first gap today. A lot of time left in the trading session out there. If we go take a look at some of the core stocks here and see what's going on with inside the core stocks this morning, we'll start off with Google here. Google trying to get down into the support of this hammer candle that's been tested on several occasions. That's the top, which is 866.33, 2.5 million shares on that hammer candle. The very next day, 2.6 million shares. The test down there, 3 million shares on June 24th, is still held. 2.5 million shares on the 25th. Yesterday's moved down, very light volume, 1.3 million shares out there. So far today, though, 500,000 shares. So volume is picking up inside of Google. Google also taking on the swing point low from July 19th, 875.61. If it can clear 875.61, there's good support there, good volume there, 7.4 million shares. It'll go test that hammer candle. Close below the hammer, which has not been tested, 847.22. That will be trouble, double trouble out there. That should also go ahead and bring that 200-period exponential moving average into play. Last time Google was testing the 200-period was November 16th, 2012. So that's going to be important for us to pay attention to and to watch. That was on Google. Intel. We take a look at Intel. Again, it had busted the hammer candle low. It's trading just slightly below that area. Yesterday was a test to try to get back inside there. That was a failure. It was 23 million shares going against 50 million shares. I don't think so. And in the case of Intel, it wants to, has not given us a confirmed large A to B equals CD down. That would be taking out that hammer with 50 million shares. Today's volume, 6 million shares in an hour of trading, so nowhere near the 50 million share day, but still you have some nice accelerated volume because the swing point, really, if you take a look at 3 days ago, only had 25 million shares from August the 9th. That is on Intel, so that is suggesting that it wants a lower price, and that would take us back into probably the early April 2013 timeframe, somewhere in the $21 area. That's on Intel. Let's go take a look here at Apple, see what there she blows, what Apple is doing out here. You know, Apple's got the confirmed more than one A to B equals CD up. Apple is now above the 200-period exponential moving average. Let me go ahead and get rid of the A to B equals CD pattern. You can see this out here. That's assuming that if Apple were to close today above 468.10, Apple has not been above the 200-period exponential moving average since December 3rd of 2012. So been quite some time. It's going to check out that view out there. It does have more room to run to the upside out here. If we just simply take a look at the A to B equals CD pattern, the 1-to-1, that was a no-brainer out there because it had volume, it had everything. It had wide price spread and volume as it passed the B point, which was July 18th. So 477.23 would be its next stop out there. I do believe with Apple getting above the 200-period exponential moving average and taking a look at that strong A to B equals CD pattern out here, and if we take a look even yesterday's volume to the upside, 13 million shares. I suppose some of this is because they're coming out with new products here in the not-too-distant future. Its real target is where the most recent breakdown, if we go to the left of the chart, that open gap out there from January 23rd, 504.77 is the number. And pattern-wise, it's got everything in place to say that it can go ahead and do that for sure. That is on Apple. So it's going to be interesting to be paying attention to the cues, because the cues themselves, because of Apple's weighting structure, with Google really just coming down and testing some of its support areas, may not be ready to bust it down to the downside. 877-927-6648. Be right back, folks.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back to the Money Masters Show, folks. Dow down 61, S&P off 5, and in the first show, the Trader's Edge show at 9 o'clock, I got a number of emails yesterday, and thanks so much. Keep sending those cards and letters. Love to get the emails from our listeners out there. And in the first hour, one of the emails I tried to cover, somebody that was just brand new to technical trading, said they've been listening. They like they're just really trying to get an understanding of technical trading. Thought I did a good job of communicating my thoughts and take a look at the chart. And the real question was, hey, where do I just start? When I take a look at a blank chart, it just means gibberish to me. Help it mean something to me. And what we covered during that session, during the first hour, was taking a look at where my eyes go when I pull up a chart, just brand spanking new, or any chart, doesn't matter whether it's new or not. And my eyes are always going to first go to, I like to be present. I always like to be present. That means I'm looking at the current day just to see what's going on during the current day. But then once I'm present, I go back and I take a look at the past. And one of those pasts that I look at is volume. It's actually the very first place that my eyes go to on any stock chart out there where volume is important to measure. Now, I've got the Dow Jones up here on my screen. I can't put the volume. We can go take a look at the diamonds out here. But I covered volume, and so I don't even want to have volume on this chart here right now because, see, there are 4 characteristics that you should measure or you can measure on any stock chart, on any chart. It doesn't have to be a stock. It can be a commodity, can certainly be a currency out there. And what you're looking at, the four characteristics are basically speed, momentum, velocity. So that's one characteristic. It's one word in essence that means the same thing out there. So speed, momentum, velocity. The next element that you want to be able to measure inside a stock chart, I call it the energy. David White, he'll call it the power law vector indicator. He's got a way of measuring the energy between swing points out there. Very critical. Sometimes, so I just call that the energy angle. The next area, volume, supply and demand. Well, we covered that out there, and there you can identify supply and demand by more than just the volume bars. There's other indicators out there in the marketplace that cover volume aspects of a stock chart. As an example, some of those indicators that would measure volume would be things such as on-balance volume or positive volume index or a moving average, a volume-adjusted moving averages, or the money flow index, or market facility or facilitation, I think is what it's called, or the ease of movement oscillator, or the Klinger oscillator, or the Chalkin or the Chaikin, I forget the thing is the Chaikin money flow index, or the demand index. I mean, there are a number of indicators out there that will go ahead and measure volume, other than just actual volume bars out there. Maybe you didn't know that out there. So there are a number of different tools that you can put on a stock chart. For me, it's really those volume bars that has the most meaning to me. I've taken a look at many of those other things, but for me, it's the volume bars. When it comes to measuring momentum or speed or velocity, what I'd like to use is I like to use the relative strength indicator out there. And the question that was posed to me is, hey, Steve, I listened to all the shows at TFNN. This came from a different viewer. You use and you focus on the relative strength indicator out there. It's kind of like, thank you very much for doing that. But I listened to Basil's show as well, and he uses the oscillators. How come you're not showing the stochastics? When I said oscillators, why aren't you using the stochastics when you take a look at a chart? And that's a great question. And the answer is because they both measure the same thing. And so when I take a look at a stock chart here, I only want to have one of those indicators. And I use the one that has the most meaning to me, that has helped me most in my trading. Neither one is wrong. In fact, they're both right. In fact, because you need to measure momentum, you need to measure speed, you need to measure velocity, you need to have that as part of your tool bag for being able to enter or exit trades out there. And I haven't had a discussion with Basil or anything, but he uses the stochastics as part of the Chapman wave to help measure that element of it. I don't even know if that's what his thinking is, but I do know that when he's using that, that's what it's actually measuring. And for me, what works best for my trading style, what I take a look at, is that also measures the same thing as relative strength. So my recommendation to that individual that sent in the email is don't use them both. Find out which one works for you and just focus on that. Because if you take a look at the chart, if you're watching us on Tiger TV, if you take a look at my chart at the bottom of the screen here, what you're going to see, the studies show that there is an 80% correlation between the relative strength index, and I've got these on the same periods of time, between the relative strength index and the stochastics. Now, I'm not showing the crossovers or anything like that in either of these two here, because that's not how I use them for what it is that I do. That doesn't mean you shouldn't. It's just not how Stevie's son uses them. But you'll see the correlation. I know I could blow it up on my screen and we could see the correlations even more. But there's an 80% correlation between these two indicators out here, when they're making their lows, when they're making their extreme highs out here. And what you should use is the one that works best for you out there. But don't put them both on your screen, is my opinion. Instead, what you want to do is make sure that you have tools that are measuring the other four areas, or in this case here, it would be the other three areas, right? Because you've got one. Now, you might not want either of these. You may want to say, hey, for momentum, I like to use the Williams percentage R, or I like to use the Trix, or the ultimate oscillator, or the stochastic momentum index. That's even different than the stochastic oscillator. Maybe you want to use the relative momentum index, or the random walk index, or you can even use Japanese candlesticks to help you to be able to measure momentum out there. Now, because my stock chart has candlesticks on it and they talk to me all the time, I get another meaning for that. But they will measure momentum out there. Maybe you want to go ahead and use the inverse Fisher transformation of the relative strength indicator out there. I mean, there are many, many different tools that will go ahead and measure momentum. It doesn't matter to me which one that you want to use. Maybe it's the CCI, which was also created by J. Wells Wilder, which is a part of the, he also created the Relative Strength Index, which is what I use. So there's like 16, 20, maybe there's even more than that out there of tools. I can't stay updated, each day on every new tool that is out there, but there's at least 20. I know there's at least, I just gave you probably 20 of them if we added those up. There's at least 20 that measure really the same thing. And by going ahead and crowding your stock chart and putting the tool on there that in essence is going to represent the same thing, to me I think you're doing yourself a disservice. Instead, what you should do is you should focus on making sure you've got the right tool for volume, making sure you've got the right tool for momentum, making sure you've got the right tool for that energy. And actually, one of the best tools that I found out there for energy, it is the Power Law Vector Indicator. So, we do have a special program here at TFNN. I heard it yesterday. I think the details are you can try out the art of the charts, the art of time of the trade charts for $1, for $1, folks. So, and there's going to be a workshop on it. I apologize. I think it's in the next couple of days out here. Maybe it's tomorrow. I think it's on Wednesday. So get over to the homepage at TFNN.com. Check out all the details out there, because I can tell you that the best tool that I have found for being able to measure the actual, what I'll call energy, verticality, maybe that's another, the verticalness, and the power behind it, is the Power Law Vector Indicator. Now, that's, you can only get that with the art of timing the trade charts out there. There are other tools that you can use for that, but I can tell you that the one that I have found that is the best, and that's really where once you find the best, you just really stop there. And so that is contained in the Art of Time in the Trade Chart. So check that out, folks. You want to go, make sure you attend the workshop. You want to test it out. All kinds of people inside the Tiger's Den getting their emails each and every morning. That tell you the different butterfly or Gartley patterns that are out there. So it does so much work for you. It's a time-saving tool. Forget about the mere fact that it's also the best tool for being able to understand the energy behind a move out there, and that is very important. So that's the second element. So great question out there, and I do appreciate that question coming in. Oh, I didn't mean to do that. I just erased something out here. I'll go ahead and put it back in on this chart. One of the things that we did, I think it was August the 1st. In fact, I'm certain it was August the 1st out here. I had done a study. The Larry Pesavento, Dr. Ruth Miller, they're the ones that really created these Pesavento Index Date, P Index Date, Planetary Index Date. They're all the one and the same. August the 1st out here. Now, this was August the 1st of this month was a 15 Planetary Index Date. I had done a study. I can't remember when I did it. It was probably July. It was probably before August 1st, so maybe it was August 1st or July 31st out there. And if we take a look at the high that came in here, it was really on August 2nd, so you can give it a day or two. And actually, there was an intraday. The spike high on August 1st wasn't even a spike. It was 15,650 out there. We got up to 15,658 on August the 2nd. Now, what's important about noting that is that these 15 planetary index dates, as we went back through it, I don't recall the correlation with regard to success, but it was like in the 70 to 80% range where it was important to note that. And what we are seeing here right now, until that August 1st, August 2nd high gets taken out, guess what, folks? It's actually working out there. So there's a number of reasons to be careful inside this marketplace. So it wasn't the new moon. It was August the 1st. I'm just going to, I'd erase that, and I didn't want to do that out here. And that was a 15P. Give me a second here to type this in. P index date. There we go. And so I can go ahead and put that back out there on my screen. So, in any event, let's just move on here. Now, going to go back to the ES Mini because, as the, was around the 10-20 time frame or so, and we were taking a look at the 30-minute chart. And so, again, this is why, so Basil uses the stochastics out here. I utilize that relative strength indicator because it helps me to understand momentum like nothing else out there. And when we were taking a look at price moving down and the momentum of price and it getting into the oversold condition and it's moving down and it got to a low of 1679, which was also, by the way, the 0.786 retracement, another beautiful tool out there to understand the natural harmonics of movements inside the marketplace. And it's moving down, it's crashing down, and you're wondering, how is it that Steve can possibly say that the market is going to go ahead and the move has got to be stalled, or it's going to move sideways or major bounce from here. How is it that he can possibly know that? Actually, it's not me. All I'm doing is just looking at the indicator, taking a look at past patterns out there, and these are tools that you absolutely want to have inside your tool bag out here. And so what we are seeing is we did see price actually stall. Right now, all it's really doing is just moving sideways to work off that condition out here inside the market. I am absolutely not saying take a long position inside the market. It's doing what it's supposed to be doing, and that's how you go ahead and you use these indicators out here. And just like on the momentum piece of it, whether it's the way that Basil uses the stochastics or whether it's the way I use the relative strength indicators, when those things fail, boy, don't they tell you a ton about momentum and the direction that it is going in? I think the answer there is absolutely, positively yes. So if we take a look, I see a request inside the den to take a look at the Great Panther. GPL is the ticker symbol. So we'll go ahead and pull this up on my chart here. We'll do it right now. That is up about 3 pennies today, trading out at a dollar. Beautiful looking stock chart out here from the standpoint of completed an A to B equals CD. It gave a nice little buy point out here in this equity on July the 11th using a indicator that I teach out there. In fact, if you'd like to have access to that indicator, if you sign up for Mastering Probability and you send me an email, I'll make sure that it actually gets on your system out here, and it's one that you absolutely want to learn and take advantage of. If we take a look at Great Panther Silver here, the B point on this looks like July 23rd at 96 cents out here. July 23rd or the 24th, both at 96 cents. 500,693. Let's use the one at 693,000 shares. That's July 23rd, the more difficult one. And what we had yesterday was we had a move above the B point, above the July 23rd swing point with volume. Gapping up into it, it was 693,000 versus yesterday's 960. That's a beautiful thing. Where's this headed to? Well, $1.11 is your 1-to-1 A to B equals CD. But is that going to be its final destination? Absolutely, positively, I don't know. Not. It's not. It's not going to be the final destination. More likely, this is going to move up to 119, maybe even 130 out there. If we take a look at where it's going to stall and run into some overhead resistance, we're just going to go back and take a look at those high volume bars and see where they're sticking out on the stock chart. And guess where that is? That's at March 15th. And the low is $1.30. And the 1 to 1.618 A to B equals CD. That is $1.30. That, Jim, in the den, Jim K, is where Great Panther looks to be headed to right now, trading out at $1.01. Let's see here. What do we have moving in these markets out here? We got Inter Oil Corp. That is off. That's the leader in the clubhouse, down about 9% this morning. So let's go see what is going on inside this stock chart here. So see what it is trading into. It's got volume to the downside, gapping to the downside. So let's go see what it, in fact, is trading into. This had volume off of the highs out here. Not a good scene. You don't like to see that. That's why you want to first go to those volume bars so you can see. I'm just doing what it is that I was teaching this morning during the first couple hours. Where do my eyes first go to when I pull up a stock chart? What's it doing today? The very first thing that I said as I was opening up, hey, this thing gapped down and it's got volume to the downside. Very next thing, I was looking for the volume bars. Where are they? In this case here, the volume bar was May 24th. That's what I call, unfortunately, for Inter Oil Corp, because at May 24th, that was volume off of the highs. That was your first indication that you had institutional selling. Guess what? Today is the second day. 877-927-6648. Be right back, folks.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow off 60 right now. S&P down 4. Russell 2000 off 6. Let's see, leader in the clubhouse here. On the way down is the Russell. New York Stock Exchange only off 0.2%. It is the laggard out there. If we take a look at the net declining issues, we got 1,270, though. So even though you've got the Russell 2000 only down 0.2%, down 21 points, you've got a pretty good wide price spread. You've got 2,000 net. You've got 2,000 declining issues versus 800 advancing issues. So we got a 3-to-1 ratio out there. That's telling you that there is some real trouble out there in River City. Now, one of the other questions that came across to me yesterday by email was the use of the VIX index. And I talk about the VIX. Be careful because the VIX and the 50-day exponential moving average are getting very close to each other. It's not going to be that much, not going to take that much of a jump for the VIX to get above the 50-day. And once it does, that's when the real carnage starts to set into the market. So the question was, can you use that on an intraday time period? So For that question that came in, here is the VIX on the top portion. I'm sorry, on the top portion of the screen, the blue squiggly line going across it. That is your 50-period exponential moving average. At the bottom, I just have the ES Mini. Now, the ES Mini is trading when the VIX isn't, but it's still a good enough indicator out here. Take a look. We'll just come back right here to the time frame of what looks like about 11:30 in the morning on July 17th. The VIX gets below the 50-day exponential moving average. Take a look at what price did here at that same time period inside the ES Mini. Was down at about the level of about, looks like about 1675 or so out here. And what did price continue to do from that point forward on the 30-minute chart? What did it do? It moved higher. It moved higher up until what point in time? When did it make its high? It made its high right here at the bar at 10 o'clock in the morning on July 24th when the VIX did what? When the VIX moved above the 50-period exponential moving average. What did it do from there? It started a retracement. So just look at, this is a tool that you can use. This is another tool. Remember, I talked about volume. I've talked about momentum. Talked about verticality, energy. That's that power law vector indicator, one of the best tools I found out there. And then the fourth element of trading out here is understanding volatility. Well, I consider to be one of the best uses of the VIX index out here. One of the best uses is understanding where it is in relationship to the 50-day exponential moving average. And now, because of that great email from a listener out there, we can take a look at it on a shorter-term time frame, which we just did right here. So let me wrap up where it is that I believe that we are for today. Still, you've got the ES Mini traveling in a 23-point sideways consolidation range. Hasn't broken that either to the upside or to the downside. A break to the downside is a close below 1672. You see a close today below 1672. That says another 23 points to the downside. Until that happens, could just be a nice 23-point trading range that the market is traveling in. But you do go take a look at the actual VIX index as well. Let me see if I can pull that up on the screen. Well, first let's take a look at the Euro Japanese yen. 120-minute chart now has a confirmation that this wants to actually go ahead and pull back to about 128.91. Whether it does that during trading today or not, or it does it overnight, if it does it overnight, you'll come in tomorrow morning, you'll see futures down, fairly decently. But the Euro Japanese yen, that's confirmed a 0.618 Gartley sell pattern out here. Of course, it'll really confirm it by 11:30. But right now, the way that I'm looking at it, looks like we've got confirmation that it wants lower prices. That leads the market. That tells us the direction of where the markets will go. If we take a look here at the VIX index itself, the VIX index, the 50-day, and this is on the daily chart. This one we really want to be paying attention to. The VIX index right now, the 50-day on this is not on my screen. How is that? How did that happen? Looks like maybe it's $14.03. It's at 13.17. Stay tuned, folks. Basil Chapman is up next. If you're off to start your Tuesday, have a terrific Tuesday. Never, folks, I mean never be a prisoner of your past. Always be a pioneer of your future. Have a great Tuesday. Look forward to seeing you tomorrow.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.